And now, AM 650 presents your source for leading-edge news and information on today's hottest products and services. This is Experts on Call on AM 650.
Welcome to Key Pacific's Talk About Strata. I'm Tony Gioventu, your host. This evening we have in our studio Albert Atfield from CanStar Restorations and Gordon Lee from CMW Insurance joining us. And we're going to be talking about strata claims and insurance claims and strata corporations and what happens to homeowners, what happens to the strata council, who's responsible for the work that gets done, what happens when you have a claim below a deductible, above a deductible, where all the damages go, who's ultimately going to be making decisions. So lots to talk about, and we'll work through the bits and pieces. But thank you both for joining us.
Oh, you're welcome,
Thank
Tony.
you.
So if you live in a strata, anybody who lives in a duplex, you live in 25 units, you live in 600 units, we're in a situation where probably the biggest investment on your annual budget outside of utilities is probably your insurance policy. So your annual budget has this huge insurance policy that's attached to it, and it's expensive. No one disputes that, but it also covers an incredibly large asset. It covers all of your general liabilities, and it covers what the Strata Corporation has an obligation to maintain essentially and repair under the Act. And then, of course, all the lists of the components that the strata has to insure. So you put all of that together, and you have a pretty important contract each year that the Strata Corporation has to go through. So Gord, who's insured by the strata? Basically, what does the strata have to insure?
The strata is going to insure the common asset. So basically, all the fixtures. You look at a strata. The easiest way I think for someone to visualize it is that before anybody moves in, the construction is done. Just before they turn the keys over, you look at the strata. Basically, in general, that's what they would be insuring. The building, the fixtures, the toilet, sink. The only thing that they would not insure in general that you should look at is really the appliances. That's something that even though the developer is kind of included in the sale, but if it's not permanently attached, it's considered your contents, because if it breaks, you got to replace it yourself. Right? But so that's what the strata insures, is that whole building you look at. You walk into the suite, you open the doors, you turn the keys, open the door, you look in, whatever is there, that's what the strata is insured.
So the strata insurance appliances, fridge, stove, washer, dryer, yes, dishwasher, we're going to be dealing with basically removable appliances.
Yes.
What about things that are built-ins, things that are built in and that the developer built into the structure of the building?
That would be part of the strata's insurance.
Right. So, so the Strata Corporation essentially has this big responsibility of insuring for all these. How do you determine what they're worth?
Well, what happens is that the Strata Act sets out that the strata must insure this for full replacement value. So, in a practice point of view, what happens? An appraisal was done to determine the insurance replacement value to rebuild or replace the property in the event of a loss. So going back to actually, I should expand a little bit on this common property asset. When you walk into a strata unit, we do see that most strata, so they have upgrades that developer allows. So those upgrades under the Strata Act, if it's done by the developer, it's considered part of the common asset. If you do the upgrade after the fact, then that's your own responsibility. So that's quite important.
So that gets into a quirky discussion around assets and fixtures, though. When you deal with the Strata Corporation insurance policy, so I go into a brand new building, and the developer says I can have upgrades for the following things. The developer, as part of the deal, will give me hardwood floors, and they'll give me some custom fixtures and appliances and things. Are those upgrades included in the insurance policy for the strata, or are they in the insurance policy for the homeowner?
Included in the stratas, because it's originally and provided by
the owner-developer.
Owner-developer. That's set in the Strata Act specifically, only if it's provided originally by the developer.
So it kind of means that the appraisal part is going to be a bit more complicated in a new building if 50% of the units have upgrades to hardwood floors and 50% don't.
Yes, absolutely.
So it's a little bit more complicated than just saying this is what it costs to replace this building today. For newer buildings where there are all these types of options of upgrades or newer developments, obviously the appraisers have to have it for the very first time at least a better understanding
Yes.
of what this property really
Yeah,
owns.
they, when they initially do these appraisals, for sure, the first time they go through and visits quite a few different suites to get idea of like, what is the replacement value and what numbers of suites have upgrades or not. That's why it's interesting that sometimes we have clients go, well, geez, why would we have to pay for the appraisal?
Right.
We should be able to build this for $200. That's great. Let's times it out, and that we just go with that. Like,
Right.
save some money, and we say, well, you can't really do that because every unit's a little different, right? There's going to be upgrades by the developers, could be upgrade afterwards, which we don't insure, but you got to differentiate that. And so it's better to have a professional appraisal company to go in and let them do the job.
So the Strata's obligation is to maintain insurance to full replacement value. They come to you, the broker. You, the broker, then advise them they need an appraisal to establish what the full replacement value is, so you can accurately set that value. What happens if that value isn't accurately set?
Well, we've never had that happen. I'm not too sure why it wouldn't be.
Right. Well, if they didn't get an appraisal, right? What if they're underinsured?
Well, then in the event of a loss, two things could happen. If it's a total loss, they're going to get up to the limit of the policy,
Right.
which means the strata is going to be short. In a partial loss, there is something, usually most policies are set in a 90% co-insurance penalty. So what that really means is that if they should have insured a building, say for 10 million,
Right.
or the value of the replacement is 10 million, 90% co-insurance means that minimum they need to insure for 9 million.
Right.
And anything below that, that payout will be proportionally reduced by the underinsured percentage. So if they insured it for $6 million, they're not going to get.
Right. They're not going to get 9 million in value back or 10 million in value back. So first lesson to learn out of this show is it's important that Strata Corporation has routine appraisals and that the appraisals are upgraded to adjust for inflation on a regular basis.
Yeah.
Right.
Annually.
Right. Annually. Very interesting. So the other side, so we talk about all the building components, everything that Strata has to insure. What are the other kind of issues that a Strata carries insurance for?
We got liability insurance, which so commonly, whether it's a townhouse or high rise, you're going to get liability claims coming out of it. So slip and fall claims.
Right.
For high rise, a lot of times we see claims coming out of, recreation facilities, gyms, saunas, swimming pools.
Right.
Things
So
like that.
somebody slips in the shower by the swimming pool and injures themselves, and that turns out to be a liability claim.
Yes.
Right.
Yes.
Their values, I think the Act says minimum 2 million with respects to liability insurance. But what's a recommended amount for a Strata Corporation?
I rarely, Tony, see a $2 million limit. Maybe for a duplex or something like that, but most stratas we see is minimum 5 million. A strata that's a little bit bigger these days, commonly 10 million is not unusual. And it's the cost is minimal. We're talking about a few $100s extra to upgrade it.
Right.
So I think most strata see the value of that and getting adequate limits.
Well, and you're in a 300-unit Strata Corporation with a work facility and recreation facilities and meeting rooms and swimming pools and commercial residential mix, and you have all people coming and going from the property constantly. It's obviously in their interest to insure to the best ability that they can.
Yeah, they got to protect themselves, and so that's what they're doing. And if you look at it from the cost perspective, I guess you get a building that's like with 300 units and you divide it out. That might cost 10 cents more per unit or something like that to get the extra 5 million. So it's well worth the money.
Right. No, it's a good point. And what about now we have Strata Council members? So we have Strata Council members and property managers. They're doing activities, they're making decisions, they disclose information, they're managing the property. What about their responsibilities, or what kind of coverage do we have for them as well?
So for the directors and officers or the council members, they were covered under a policy called Directors and Officers Liability, and that's for financial loss of results from decisions they make.
Right.
And an error occurs in that decision. And then the property manager is also usually covered by a property manager errors and omissions, where, if they make a decision or under the instruction of the Strata Council, there's a financial loss.
So I could think of a scenario where a buyer comes in, they're looking for information from the strata, they want to know about what's coming next on the future liabilities, they get documents from the strata, the buyer buys, and then it's discovered that there's a significant issue that wasn't disclosed to the buyer. The buyer may have some financial losses and may turn around and sue the strata corporation. So that would be one of the reasons probably for errors and omissions insurance.
Correct.
Something like that, yeah.
Yes.
So something where we're dealing with transactions. The other thing we have, of course, is we have a lot of strata corporations now, especially in the metropolitan areas where we have mixed commercial residential, or we have airspace parcel agreements between properties, and we have these very complicated systems now. What about insurance differences for them? Should they be looking at additional insurance and additional coverages?
Well, I think what happens is that what we're seeing is that if it's an airspace parcel, it's actually quite important that they have quite adequate limit of liability, because when we get water damage claims coming from one unit to another, which actually end up to be an airspace parcel, or we get situations where there's lawsuits in between because we got parking arrangement issues, right?
Right.
So those things are something that's, I guess, beyond the average strata that they would see if they weren't involved in, where there's airspace parcel or with commercial units.
Yes. Okay. So Strata Corporation, we have Fraser Valley, the Okanagan Valley, where we have locations around the province where people are on floodplains, they're on river deltas, Richmond. One of the benefits that stratas have, we've discovered, is overland flood insurance, which doesn't necessarily apply in all regions, but it's a significant benefit as opposed to non-strata titled property.
Yeah, that's quite interesting, Tony. I mean, the non-strata title, actually, flood coverage, for example,
Yes.
is not available.
Right.
People could say, doesn't matter how much it costs, I want to buy it. How much is it going to be? And it's just not available, where strata is insured generally under a commercial policy.
Right.
And under commercial part of insurance, flood coverage is available.
Right.
And so that's a huge benefit. In the event, a flood does occur, they pay a deductible, they got coverage. The homeowner next door, no coverage.
No coverage. And we've seen that with things like the Alberta floods, the floods in Ontario. We've seen the perspective on the difference between the strata and the non-strata titled, because strata titled properties are deemed to be a type of commercial property, aren't they?
Yes.
Yes. So for the policy, that's where they get the coverage from. So there's some excellent benefits in that.
Yeah, there's some benefits that, I have to say that it's not available for other people, which they kind of say, can I change my policy to commercial policy to get around that? And, that makes it a little bit more complex if they do that.
I'm speaking with Gordon Lee and Albert Atfield from CanStar Restorations, and Gordon's from CMW Insurance. And Gordon, the strata, every year when they buy their insurance, what should they be looking for? What should they be reviewing? They may or may not have a property manager, but I've seen the value of stratas working with brokers every year, so the brokers can help them through the evolution of the insurance transition. But what are some of the things they should be looking at?
Well, when they look at their value, so common things we see is that we talked about appraisals. So self-managed strata a lot of times don't understand that, under the Strata Act, they're required to actually insure for full replacement. Right. So they a lot of times don't have an appraisal because they don't know they need one, nor do they know usually where to obtain one. Sometimes you also will see that they buy policies that are inadequate. It doesn't provide directors and officers insurance, which they somewhat need, but they don't understand that what's the coverage for. So they don't have it. They can't go, well, we just need the building insurer and we just need a bit of liability and we should be fine. So you'll see that self-managed generally would have some weaknesses in those areas.
So it's even more important if you, the Strata Council, are actually dealing with your insurance renewal each year. It's probably even more critical that we actually take a direct approach to dealing with your insurance broker. Asking for things like, what are our minimum coverages? What are our options? What are the additional things that we can purchase? And what the costs and the variables are. One of the challenges that we see for strata corporations is who makes those decisions. You were talking about the liability insurance minimum 2 million, but most are 5 and 10 million is available. But who actually makes the decision as to whether the strata policy is going to be 5 million or 10 million? And it's the Strata Council and the Strata Corporation, the owners. right? And so they still have decisions to make as a strata corporation each year, and that's probably critical for them. We've seen a number of incidents in Western Canada over the last 5 years, things people never think about. One of the things we're insured for is impact by aircraft. And we've seen incidents where we've had high-rise buildings that have actually had parts of aircrafts or the aircraft itself crash into the buildings, and the restoration that's been involved. And so, we have all of these variables that we're insuring for. So working with the broker is probably one of the more valuable things that the Strata Council can do each year.
Yeah, I think they should spend some time versus just getting a renewal. They should call the broker and ask them to review it. I think most brokers today, if they know what they're doing with the strata, they would make sure to do a review with the client and make some recommendations.
Right.
To make sure they have the proper coverage as needed per that strata.
Right. This is Key Pacific's Talk About Strata. We have a new email address for everyone to respond to. It's questions@talkaboutstrata.com. questions@talkaboutstrata.com. We're going to take a short break, and we'll be back in a moment, and we're going to talk to Albert from CanStar Restorations. And we're going to work through some of the things that happen in an insurance claim when you actually have that dreaded massive water leak or a fire that results in water and smoke damage and everything else that happens to buildings. I'm Tony Gioventu, your host, and this is 650's Talk About Strata.
Delivering relevant and beneficial consumer information. This is Experts on Call, and there's more still ahead on AM 650.